On the questions of when we can start capitalizing borrowing costs, it all depends on when we start working on the qualifying asset. Specifically, we must meet all three conditions given by the standard, that are: first, we must incur expenditure for the asset, meaning that if we have not used the money for the asset, any charges of interest cannot be capitalized. Second, we must incur borrowing costs. That means we can only capitalize what we have been charged with. If we were given, say for example, 6 months interest-free period, and within that 6 months we have incurred expenditure for the asset, we still could not capitalize anything as no borrowing cost has been charged or incurred by us. There is nothing to capitalize. Third, we must already undertake activities necessary to prepare the asset for its intended use. Either start the processing, or the building, or even just clearing a land so that we could build our intended warehouse. If we have been charged interest, and we have incurred expenditure like buying in materials, but we have not started any other activities after that, for whatever reason, we still could not capitalize the interest charge. All of these three must be fulfilled at the same time. Then we could capitalize the interest charge or the borrowing cost. The standard also specifies suspension of capitalization, if any. Suspension simply means that to stop the capitalization temporarily, which will be resumed at a later date. For this, an entity shall suspend capitalization of borrowing costs during extended periods in which it suspends active development of a qualifying asset. As for when to stop capitalizing, that is to stop forever, not temporarily, is when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. Also, depending on the qualifying asset, if the asset is constructed in parts and each part is capable of being used while construction continues on other parts, the entity shall cease capitalizing borrowing costs when it completes substantially all the activities necessary to prepare that part for its intended use or sale. That means, if the intended asset is actually a part of a bigger asset, and it can be used or sold separately from other parts, once we have completed that part, the capitalization should stop. Now, it is time for you to try to determine the capitalized borrowing costs. Let's start with specific borrowing. We have here a company that took a loan worth 1 million ringgit on 1st May for the purpose of building a production hall. The constructions of the hall started only on 1st of June. And the company invested 800,000 of the money for 2 months at a rate of 2%. How much is the capitalized borrowing cost for the year 2020, assuming that all interest was paid and the financial year ends every 31st December? Please pause this video, try to calculate the borrowing cost capitalized, and then you may resume playing this video. I hope you already have your answer with you. The first thing to note is the capitalization can only start on 1st of June, since this is when the construction started, while the interest has already been charged since 1st of May. Assuming also, since construction started, then the company should have incurred some expenditure from the construction activities. So we can start calculate the interest charge. 1 million ringgit times 5% annual interest rate times 7 months since 1st of May till end of December 2020, so we get a total interest charge at approximately 29,167 ringgit. But that does not stop there, because the company also invested some of the borrowed money, 800,000 to be exact, so we need to deduct from the interest charge the income that we get from the 2 months investment. That is 800,000 times 2% times 2 months of investment, and that gives us approximately 2,667 ringgit worth of income from that investment. Therefore, the total borrowing cost that can be capitalized is only 26,500 ringgit out of the total 29,667 ringgit. What happened to the borrowing cost for the first month of May? It will go to expense account as a normal interest. Did you manage to get the same amount? Very good. Now can you do the partial journal entry? Let us now try this exercise, a general borrowing. Remember, for general borrowing, what we need to determine first is the capitalization rate. So here we have a company that has few loans. A 200,000 loan from a bank at 6% interest per annum meant for a construction of a production hall. A 180,000 loan from a bank at 8% interest per annum, and 50,000 worth of 5.5% debenture issued. Both loan and debenture were granted and issued on 1st January 2020. For these two sources of fund, there was no specific purpose. However, the company used some of them for general spending and for constructions of a machinery. Specifically, for the two sources of fund, the company used 60,000 ringgit on 1st February and another 25,000 ringgit on 1st September 2020 for the construction of the machine. Can you now calculate the amount that the company should capitalize as part of cost of the new machinery? Again, pause this video, determine the capitalization rate, and try to calculate the amount capitalized by the company. Then, you may resume playing the video to check your answer. I hope you already have the answer with you. First, we ignore bank loan at 6% per annum because it is a specific borrowing for another asset. Only the general borrowings are relevant to the new machinery as the qualifying asset. So we calculate the capitalization rate. The total amounts of the borrowings is 230,000 ringgit. Then we need to calculate the amount of interest for the loan and the debenture. 8% for the 180,000 worth of loan and 5.5% for the 50,000 worth of debenture. So we get 6.26% from the loan and 1.2% from the debenture. Thus the capitalization rate is 7.46%. Therefore, the borrowing cost that can be capitalized as part of the cost of the new machinery is the capitalization rate times 60,000 ringgit cash used on 1st February, that means the interest will cover for 11 months, and capitalization rate times 25,000 cash used on 1st September, that is for 4 months worth of interest. That gives us 4,103 from the loan and approximately 622 ringgit from the debenture, and the total is approximately 4,725. That is the total amount of interest that shall be capitalized by the company as part of the cost of the new machinery. Did you get the same amount? Very good. If you did not, then please try again. Now, can you calculate how much the borrowing cost that can be capitalized for the company's production hall? And how much is the amount of interest in total that will be expensed for the financial year of 2020? How about the partial journal entries? The final thing about borrowing costs is the disclosure. The standard requires all reporting entities to disclose the amount of borrowing costs capitalized during the period and the capitalization rate used to determine the amount of borrowing costs eligible for capitalization. Now before we end this discussion, let us look at some questions here. These questions are taken from IFRS Box website. It is actually a good site that discusses the IFRSs, and it also has videos discussing each standard. You might want to check this site. Just Google IFRS Box. The first question: can we capitalize interest costs in the cost of inventories? The answer is, it depends. In most cases, inventories do not take a substantial period to get ready, and in this case, no, we cannot capitalize. But here, there are some examples of inventories that can take substantial period to complete. Cheese that matures in cask for a long period of time, large items of equipment such as aircraft, ships, and power transformer and distributor. In this case, we can capitalize borrowing costs. It's all up to us whether we want to capitalize or not. While we have no choice for property, plant, and equipment, you have a choice for inventories. Either we capitalize or expense it in profit or loss. The second question: can we capitalize exchange loss on specifically borrowed money in a foreign currency? The answer is yes, but we cannot capitalize it in full. The standard says that exchange differences on foreign currency borrowings are a borrowing cost to the extent that they are regarded as an adjustment of interest costs. Simply say, you can capitalize the difference between the interest on the foreign currency loan and the hypothetical interest expense in your own functional currency, because that's regarded as borrowing costs. The rest must be expensed in profit or loss. Question 3. Can we capitalize interest costs on intercompany loan for qualifying asset? The answer is yes, but in the separate financial statements of the borrowing company. In the consolidated financial statements, however, we need to be a bit careful, because based on the intercompany relationship, intercompany loan might be eliminated. Because basically, we do not give loan to ourselves, let alone charge interest. More often than not, intercompany loans are interest-free. Under MFRS 9, we should recognize almost all financial instruments at their fair value, sometimes plus transaction costs. And if a subsidiary gets an interest-free loan from a parent, its nominal amount is not at fair value. Therefore, a subsidiary needs to set the fair value of the loan received using the market interest rates, and book the difference between the loan's fair value and the cash received in the profit or loss. Then, interest expense calculated by the effective interest method is capitalized. This might sound odd. The loan is interest-free, but you still need to capitalize some borrowing costs on it. These other 3 questions are taken from PwC article that discusses borrowing costs. Accounting firms' websites are another source for a good discussion on standards. Just go to their websites and find the topic or standard that you are interested in. So question 4. Does intention count when assessing whether an asset is qualifying asset? The answer is yes. Management should assess whether an asset at the date of acquisition is ready for its intended use or sale. The asset might be qualifying asset depending on how management intends to use it. For example, when an acquired asset can only be used in combination with a larger group of fixed assets, or was acquired specifically for the construction of one specific qualifying asset, the assessment of whether the acquired asset is a qualifying asset is made on a combined basis. Question 5. Can we capitalize borrowing costs of a qualifying asset constructed by third party? The answer is yes. The borrowing costs incurred by an entity to finance prepayments on a qualifying assets are capitalized on the same basis as the borrowing costs incurred on an asset constructed by the entity. The capitalization starts when all 3 conditions are met: expenditures are incurred, borrowing costs are incurred, and the activities necessary to prepare the asset for its intended use or sale are in progress. Expenditures on the assets are incurred when the prepayments are made. Borrowing costs are incurred when borrowing is obtained. The last condition, the activities necessary to prepare the asset for its intended use or sale are in progress, can vary, depending on facts and circumstances. And last question, can borrowing costs for property under construction for future use as investment property measured at fair value be capitalized? The answer is yes. MFRS 123 or IS 23 does not require the capitalizations of borrowing costs for assets measured at fair value, as, on a net basis, the carrying amounts of the asset would not be affected. But management can still elect to capitalize those borrowing costs. An entity can elect to do so, reduces its interest expense incurred during the period by the amounts of borrowing costs capitalized, and adjust the carrying amounts of the investment property accordingly. Remeasurements of the investment property to fair value has a direct effect on the gain or loss arising from a change in the fair value of investment property recorded in profit or loss for the period. So there, we have completed the discussion on borrowing costs under MFRS 123. Our next discussion will be on Accounting for Government Grants, MFRS 120. The exact title of the standard is Accounting for Government Grants and the Disclosure of Government Assistance. As always, please read through the standard and the topic. The PowerPoint presentation has already been uploaded in Putra Blast. Please replay this video if you think you might miss anything. And please post any questions that you have in the forum provided in Putra Blast. Until the next video, thanks again for your attention and Assalamualaikum warahmatullahi wabarakatuh.